we technically want to focus on the sixth schedule of the Income Tax Act. Please, I beg of you to make your own notes. Okay, make your own small notes so that you remember, because some of them have specific rates, specific timelines. And if we ask you the question and you are unsure and go and mix it up, you realize that you won't get the marks that you deserve. So the sixth schedule is dedicated to what we call the tax incentives, or what we will normally call temporary concessions. And when we say something is temporary, remember it is temporary. It is not permanent. So we intentionally create within the tax law for some shady reasons, or for some political or economic reasons, we create some concessions for some period of time, after which we take it off. And when we say taxes and incentives or concessions, they are deliberate policies that are implemented by government, and they have a specific objectives. They are specific objectives, normally to encourage some activity within some sector, or we intend that you behave in some way by reducing liability for you. It's mostly available. Okay. So these incentives, we intend that if you want to take advantage of it and reduce your tax liability, then you don't have to change your behavior, or you need to engage in some specific activity in order to benefit from this. Okay. And like I mentioned, their aim is to stimulate some economic activity. In some cases, we want you to help reduce unemployment, or we intend that you engage in some social activity, or for some specific industry or some specific sector. If you look at our tax law, mostly the tax concessions or the incentives that we give, we are so liberal with agric. Why? Because we believe that food security is so important. Food security is so important. So you realize that some of these concessions, they are targeted at agricultural activities or agro-processing. Now, in the Income Tax Act, we have outlined them there in the sixth schedule, and they are time-bound. They are time-bound. So if you don't take it, you lose it. Okay, or if you go in there and your time is up, then we have to take away the tax benefits from you. Okay. Now, if you have your act, kindly open to the sixth schedule for me. And I believe that your advanced taxation lecturer has already taught you that the Income Tax Act has 7 schedules. The 7th schedule, we have repealed it in 2016. The 7th schedule is on tax administration. Remember when we passed the Income Tax Act in 2015, the Revenue Administration Act had not come into place, or we had not passed it. So we needed a schedule to manage tax affairs. So we labeled it the 7th schedule as tax administration. That is gone. So we currently have 6 schedules, which we have been using. And each schedule, each time, please, you have to be updated on your tax laws. In Ghana, if you are not updated on your tax laws, you will be overtaken. In fact, not only in Ghana, tax laws keep changing every time. The first schedule to the Income Tax Act is tax rates. Every single tax rate that you need in Ghana, every tax rate, and I mean tax rates, the rate that we multiply by the chargeable income to get the tax payable, is found in the first schedule. Okay, the first schedule has 1 to 9 sub-paragraphs. Normally, withholding tax rate, we find it under paragraph 8. Individual PYE rate, the graduated rate, we find it under paragraph 1. These are under the first schedule. And I know your advanced tax lecturer has already taught you that, so I'm not going to talk more about it. The second schedule is what we call the modified taxation. And the modified tax, why do we call it modified? They are targeted at some specific people. In the modified taxation, we have something we call presumptive taxation. It is mostly for small businesses. This particular second schedule, we have not been able to implement it since we passed it in 2015. Presumptive, we presume your income, then we charge it. We apply a flat rate of 3% to you. I don't want to go there again. This is also advanced taxation. So presumptive tax, or what we call the modified taxation, is in the second schedule. Schedule is on capital allowance, which most of you are very familiar. Capital allowance. Those of you who have passed oil and gas already, you'll remember you did oil and gas taxation, calculation of capital allowance, the fifth and sixth paragraph of the third schedule. In other words, third schedule in general deals with capital allowance. Then the fourth schedule is quantification of benefits. Those benefits in kind that we give you. Normally, we use the fourth schedule for employment income. So we give you a vehicle, then we give you a table, we give you accommodation, then we give you a table, how it is calculated. Those are benefits. We have quantified those benefits and we have put it there. So they are standardized across board. And in the fourth schedule, you also see those who get interest-free loan. Not really interest-free loan, but where they get subsidized loan or loan benefit. It used to happen in the banks a lot. So if you and I are going for loan and we don't work in the bank, we'll pay the normal commercial rate. But those who work in the bank, you see that. Am I recording this class? Okay, yeah, I think so.
Yeah, you are doing that, sir.
So the loan benefits are all found under the fourth schedule. The fifth schedule is on personal reliefs. Personal reliefs. You remember that as an individual, we are not entitled to deductions. This particular provision, I always have a problem with it. Why is it that Section 8 says that when we are calculating employment income, you cannot deduct expenses, but businesses, when they are calculating their income, they deduct expenses. Maybe because it is difficult for us to track it. So no deductions at all. So the only deduction that we get is in the form of personal reliefs, and that is under the fifth schedule. Okay. So the sixth schedule, which we are discussing today, is what we call the temporary concessions. At this level, as you are about to pass out, you should know all your laws in and out. You know the various schedules. First schedule rate, second schedule modified taxation, third schedule capital allowance, fourth schedule benefits or quantification of benefits, fifth schedule personal relief, and sixth schedule is the temporary concessions. They are the tax incentives. The seventh schedule, I've already explained to you that we have abolished it or we have repealed it following the coming to force of the Revenue Administration Act. The seventh schedule used to be the tax administration. So we are now on the sixth schedule, which summarizes everything for us. So, okay. So that's what we want to talk about. And remember that these incentives or concessions are their main policy objective is to grow, is to drive growth. Okay. And we need it is targeted at okay. So please, as you read the sixth schedule, remember some of these things that I'm telling you, the policy objectives that we intend. It is a strategic plan, it's a strategic, not a plan, it's a strategic initiative by government, and not just going there. We intend that at the end of the day, you should be able to do something. No, don't just go there and then go and take advantage of the tax incentives and then you think that no, they expect that you achieve something. That's why for me, I've had a problem with tax incentives or tax exemptions. If they don't yield any results, let's cancel them. All right. Now, to read your sixth schedule, please remember agriculture. In agriculture, if somebody decides that he wants to engage in the activities of agric, the laws give them some tax holidays. Okay. And if you are farming, normally we classify the agric sector into three crops: cash crops, livestock, cattle, agro processing, and sometimes cocoa byproducts. And the tax rate, the exemptions ranges or holiday ranges from 5 to 10%. I need someone to pick up the 2023 tax amendments and share it on the page for us. The 2023 tax amendments. And anybody having it on his phone? Can you share it on the page? Because we need to make some references there. Okay. For example, there are tax holidays, okay, where we expect that within that holiday, you don't intend to pay anything. However, we need to protect the tax system such that if you decide to give free exemptions to people and they don't pay anything at all, that is likely to distort the tax system. Or what do you think, Akuka? That is why we initially, when we started, they were paying 1%. Under the Act 592, and please take notes, and this is for practice, not for exams. Under the 592, the old one, before 2015, if you are under a tax holiday, you are just on a holiday, you don't pay anything. But when we came to 2015, we said, look, let's protect the tax system by introducing a 1%, even when they are in a holiday. Can somebody read the first schedule, paragraph 7 for me? I need a reader. First schedule, paragraph 7.
Okay,
Paragraph
I'm reading. Rate of tax, paragraph
Correct.
7. Rate of tax on persons entitled to concession under the safe schedule. The income of a person entitled to a concession in the safe schedule is subject to tax at the rate of 1% of chargeable income.
So even though they are on holiday, under the old law, holiday was actually a holiday. But when we came to our 592, we said, look, let's now impose at least 1%. Pay something small. No coffee. Okay. So we said that you guys, though you are on holiday, pay at least 1% to support the government. And for me, I think it was a good initiative so that you don't distort the tax system. At least we are restricting you to go and do something, farming in the village, agro processing, and all those things, and you are helping feed the country. But at least you have to pay at least 1%. Abuga, am I online?
Yes, sir, you're online.
Good. I need somebody to check the 2023. This particular rate was amended to 5%. Those on holiday. So they are now doing 5%. The question is, are we gradually taking away the concessions? What do you think? In your view, are we gradually taking away the concessions? Okay. Godfrey.
Yes, sir.
Okay, who is talking for me? Gabriel. Let's hear you.
Sir,
what do you think?
I don't know. Maybe people are taking too much advantage of the concession. Somebody can decide to do the farming for 10 years, and at the end of 10 years, he has not paid anything. He can decide to close the business. So, in case we have made the person
another one, and I say,
oh, so either he can start or sell the business to another person.
Okay. Well, that point so you've mentioned, Deborah, that point you've mentioned, take note of it very well for me. I'll come to you when we get to some points. We'll come and read some portions of the law, and then you come back and then defend that point for me. But Deborah, your view, do you think we really tax our great farmers in Ghana? Have you seen coconut farmers in Ghana? Cocoa, I mean those who do coconut. To the coconut
now it's very, very lucrative.
Yes. Do they pay tax at all?
At all.
Krista, you need to come back and help us because you are with Jerry. Anyone again with Jerry? We need to know whether the coconut sellers or the coconut people who plant coconut, the plantain people and all those people, are they really, really paying taxes? Okay. All right. I'm still waiting for somebody to pick up the 2023. Okay, Daniel has posted. Daniel, thank you very much. Daniel, look for the place where the 1% that Akuka read has been amended to 5%. Okay. I think Daniel has shared it. So look at item number 13. First schedule to Act 896 amended. First schedule. So item number 13. I don't know whether that is the one.
13. 13C.
13C, eh? What does it say? Read for us.
Yeah. The substitution for paragraph 7 of rate of tax on person entitled to a concession in the state schedule. The income of a person entitled to a concession in the state schedule is subject to tax at the rate of 5% of chargeable income.
Correct. Thank you for sharing. So you realize that now it's no more 1%. and therefore it is 10%. Let's go on to another key provision. You also read rural banking. Rural banking, when we started, those who are from the village like me, the banks, commercial banks, were not going there at all.
I said, please, can I get some small clarification?
Yes,
is this rate for the those in the agriculture industry?
Sorry?
The 5%. Is it for those in the agricultural sector?
Everybody under the fiscal that we are going to discuss.
From 1% to...
Exactly. From 1% to 5%. And remember, we are saying that those under a concession, the income of a person, I'm reading it, the income of a person entitled to a concession in the sixth schedule is subject to tax. So once you are in the free period, or whilst we are on tax holiday, in Ghana, we don't call it exactly a holiday. We are saying that you are supposed to pay tax at the rate of 5%, whilst your colleagues pay at 25%. I hope it's clear.
Yeah, it is.
Okay. The next thing that we are going to discuss is rural banking. And I was explaining that rural banking used to be limited to just the deep rural areas. Okay. And we granted them 10-year tax holiday. And the purpose is that they should carry financial inclusion to the undeserved areas. Rural banking is one thing that we'll also be talking about. The next one is waste processing. They also have a concession of 5 years period. 5 years when they recycle waste. And the purpose is to ensure environmental sustainability. Number 4, we'll also be talking about residential premises. Here is very important. Housing deficits. Okay. Housing deficits. So the intention is that if you go into low cost housing construction, I don't know what they call low cost, because today 2-bedroom, very expensive. The land alone, those, if they go there, we give them incentives. And then also individuals who also take mortgage in order to solve their housing problem, we also try to give them some deductions on their mortgage interest. Unit trust, again, I need somebody to go to 2023 or 2022. This 5th paragraph has been amended. So Daniel, this one will give it to you. Check from 2016 if unit trust schemes and mutual funds have been amended. Okay. They also have 10-year period. And it was also to encourage investments in financial markets. We'll be talking about venture capital. Okay. Venture capital too is for startups, entrepreneurship. So you see, all these things are targeted at something. We need them to help solve specific problem. Okay. And in Ghana, startup is one of the big problems that we have, entrepreneurs. Fresh graduates, unemployment. So we are saying that if you employ the fresh graduates, we are going to give you some incentives, especially for the youth. Free zones. Free zone, if you operate in the free zone, nowadays the free zones, they are taking away the incentives away. There's a third, and another one, which I have done a separate video on. So I will not bother. Maybe we cannot even finish this one today. So I'll share the videos. So there are other incentives that I have done the video separately. For example, universities who plow back, private universities who plow back their profits. We have some incentives for them. Young entrepreneurs, I've done a separate video for it, so I'll share with you. Not just like 30-minute video. I have a problem that policy was so good. Tax incentive for young entrepreneurs. But I found problems with the implementation or even how the law was drafted. So that one we'll take a look at that one. Okay. I need somebody to also look at section 34. Section 34 of the Act. Okay, section 34 of the Act is very strict. Okay, so the meaning and implication of section 34 as far as the concessions are concerned.
134.
Issues, section 134. Why am I mentioning 34? Can you see my screen?
Yes, sir.
Thanks for drawing my attention. It's 134, not 34. Okay. Who does the honor? The reason why I want us to look at section 34, 134 is it has everything to do with the, what do you call it? In fact, it is titled temporary concessions. So do us the honor by reading section 134 for us.
Okay. I read.
Okay.
Temporary concession. Two, unless expressly stated to the contrary.
Did we hear the first one? Did we hear him?
No.
I didn't hear you on the first one, so take it again.
The provision of the safe settle subsection 2, unless expressly stated to the contrary, the provisions of the safe schedule apply strictly and only in accordance with their clear wording.
Now, Abuga, that has a very strong meaning. Look at the strict interpretation of it. They are saying that unless expressly stated to the contrary, the provisions of the safe schedule apply strictly
and only.
So they want to tell us something there. You can't abuse it. And the reason is that, you see, taxpayers, if you try to give them 1 mile, they will take 2 miles. Okay, go to the third one.
Okay, subsection 3. A person is not entitled to a concession in the safe schedule if an associated person has benefited or is benefiting from that concession.
This one too. So if someone has benefited or you are, it has a very strong meaning there. Person is not entitled to a concession in the safe schedule if an associated person has benefited or is benefiting from that concession. Okay, go ahead.
Okay, 4. This section does not apply as between two associated individuals who are residents.
Okay, continue. We'll come and look at the implications.
Okay, 5. For the purpose of this act, where a provision of the safe schedule applied to a grant concession to a person with respect to a particular type of business, A, the business is construed narrowly and only the person's activities devoted wholly, exclusively, and necessarily to that business are treated as part of the business.
Okay.
Should I proceed?
Continue.
The income gained by a person or loss incurred by a person from the business for a year of assessment is calculated separately from any other activity of the person. And C, an unexpired period granted under the concession shall be treated as having been transferred to a new owner of the business in case of transfer of ownership of the business, and that concession shall not commence with new ownership.
Gabriel, this is where I said hold your thought and then you defend it. Have you seen the way we put it here? So if I have 10 years and I have chopped only 3 years and I transfer the business to you, you cannot restart the period. You have to continue for the unexpired period. Okay. Read the last one. 6.
Okay. Unless expressly stated to the contrary, the income of a person entitled to a concession in the safe schedule is subject to tax at the rate provided for in the first schedule.
Good. So here, I think Daniel Opon has indicated to us that it is 5%. Okay. Now, just like Akuka has read, 134 defines the framework within which every concession or incentive that we are going to discuss should center around. Okay. And 134 is to make sure that we clarify every ambiguity if there's anything you need to understand before you go there, and fairness, you need to go in there. Okay. First of all, subsection 1 is telling us that it is temporary in nature. They are not forever. They are temporary in nature. They are time bound, and they ensure that they have a short-term implication to, in fact, if we intend to stimulate economic activity through agric, all of these things are short-term. Subparagraph 2, as he read, means that we have to adopt strict interpretation. Strict interpretation, no assumptions. The provisions must be according to the words. You cannot imply in it. The reason is they have a short term. In fact, they have a benefit to the. We are giving away tax to the person. If you are an associated person, we take you out. You cannot benefit. If someone has already benefited from it, but there is an exception. We are saying that it does not apply to individuals who are both residents. And the reason is that we don't want to be overly restrictive. Okay, so if you are both residents, we allow. Again, we have to adopt a narrow construction of the business scope. So we are saying that it must be wholly, exclusively, and necessarily devoted to the specific business that you are doing. If you are into agric, it must be wholly devoted into agric. If you are into tree crops, it is wholly dedicated to tree crops. Okay, and 5B says that if you have any other business, then we have to calculate the taxes separately, even though it is the same, maybe Timore Limited. When it comes to transferability of the concession, I can transfer to you, but the remaining period must also be transferred. You cannot restart it. And the reason is that, other than that, after 10 years, especially the free zone, after the 10 years, I'll form another company, transfer it to them, and then they will also restart. Then the thing is perpetuity. But we need to maintain the original time frame. And that is why any new or any person who comes in as fresh must continue with the time. Yeah.
With this one, what if after the expiration of the 10 years, the company is sold and then the company name has changed? Can they still apply for the new company, the new management? Can they apply for this? Does it apply to them, the concession?
The company that you sell the company.
Yeah. So the name, the management, everything has changed.
So it's just the change of name and structure, but the company is still the same.
Yeah, but new people are managing it.
Company is a perpetual. Company is a separate legal entity. As far as the company is not dead, and he has remarried there, will continue. It's the same company. But as for management, even within the 10 years, management can change. Shareholders can change.
But in this scenario, they've changed everything. Like the company have been acquired by another person.
But it's the same company, isn't it?
Where it has been acquired by another person, the
same company means that the same company will register at Registrar General. Okay.
So different name.
Different name. Change of name.
Yes.
Yes, but a company can change its name, but it's the same company.
No, but different name, different management. Everything has changed. They've sold out the company.
Okay, who are the lawyers here? If you change a company's name and you change the management, the CEO, has the company changed? Does the first company has it ceased to exist? Has it been liquidated?
Are you looking at the nature of business? Are you looking at the nature of business?
The nature of business has changed. Ebenezer, your line is breaking.
No,
you see, these are
that
some of
one
the
still
these are
remains.
some of the tax planning things. That is why Section 2 says that we should adopt strict interpretation. No, other than that, people like Ebenezer will advise their clients. Charlie, let's change it.
No, sir, I'm not advising anybody.
No, I'm saying that if you become a consultant and you set up your company, you use some tactics. Tactics you on the 5% to say 1% forever. But even let me hear you very well. Are you saying that the company, what ways has, remember when a company is established, the only time the company ceases to exist is when the company is wound up. A company can change its name, they can change their objects, they can change the management, everything, but still it's the same company. The certificate, and in fact, the company as we have bet it at the Registrar General is the same company until we wind it up. You remember your company law, even?
Yeah.
That is the only time.
Yes, sir.
So take for example MTN. They started from Space Phone. That was a new management. They came to Ariba, new management. They came to MTN, new management. They can do another one. But the company has never been liquidated. So new shareholders take over as they move. We can't say it's a new company. A new company means that a whole new company. In fact, the only time you can say a company is new is when you go to the Registrar General and no more there. Even when they merge, they still have the old company as there. Unless maybe I don't understand it, but I get what you are saying. That is why Subsection 2 is there. If you can change your name, change your words, and do everything. You can even merge. Even we will look into the lines, okay? We'll read all your documents and apply strict interpretations to you.
Oh, okay. Okay.
Because if you don't do that, that concession will be abused 100%. Trust me. And then look at the paragraph 4, narrow construction of business scope. And then we even went ahead to exclude associated persons. If somebody you are related to some way somehow has benefited or benefiting from it, then you won't enjoy it. Do you get it?
Yes, sir.
And
Yeah.
the policy implication is that there must be consistency and predictability. You see, if we adopt strict interpretation and narrow business definition, we will ensure that there's consistency applying to everybody. And again, we want to prevent double benefits. The thing is time bound. It's like you are writing an exam, say, now I got 3 hours, I got 30 minutes to time. Then we substitute you for another person. Should the person come and also enjoy 3 hours? Even. I understand what you are saying. I mean, it's they are bound to happen, but we have to find a way of preventing abuse.
What about if you diversify your business?
If you diversify, we adopt strict interpretation. We read all your documents. If we think that you are doing a tax avoidance, we won't give you.
You are in coconut farming and you want to go into fishing.
You want to do into fishing. So then we come to we apply the narrow construction of business. The business qualifying for the commercial is narrowly defined to ensure only the activities wholly, exclusively and necessarily devoted to the are eligible. So if you change,
but sir, if it's an activity based,
what does it mean?
Is there an activity based? Meaning, if let's say you are doing a tree crop, and then they've given you the 10 years. Now, some way somehow you go into fishing. You go into fishing. Would they grant you another 10 years?
No. No. That's an abuse. That's an abuse. That's an abuse. No, if you look at the policy reasons for we introducing this one, I think you will be abusing it. Be abusing it. Okay. So look at the strict interpretation analysis. Consider an agro-processing business benefiting from a 5-year tax holiday. The concession applies only to activities directly linked to agro-processing, excluding unrelated ventures by the same company. Okay. If the business is sold in its 3rd year of operation, the remaining 2 years of the tax holiday must be transferred. And again, if another company owned by related individual already benefits from this concession, the new company will not qualify. They are deliberate mechanisms to ensure that people don't abuse it. That's all. You guys, you get it?
Yes, sir.
Hey, somebody is asking me a question. Oh. Not you. Sorry. Any question on this?
Please, quick one, please.
Mm-hmm.
If you are in a group, like you have a parent company and you have maybe subsidiaries,
Mm-hmm.
and then the subsidiaries are into this tax incentive or temporary concession industries, and then they have started businesses in different years. Does this temporary concession applies to the parent company, or they apply to the subsidiary company individually?
Oh, this is an individual affair, so the parent company cannot enjoy it at all. Parent company there, you don't come near at all. These are individual affairs. But the good thing is that you don't need to apply for any special license to enjoy the temporary concessions. That is what the law says. You go ahead and take it. But when the GRA come to do an audit and they realize that you are trying to swindle them, then they will adopt all their strict interpretation and blah, blah, blah. And if you go to court, you may lose. The judge will also think that you are engaging in tax avoidance. Agric or agriculture. Where an individual, please, we've amended this one. So all those who are using all those who are seeing individual. So when the law was passed initially, they excluded companies out. That this is what the original said. Where an individual conducts a farming business wholly within the country, that individual is subject to tax at the rate provided for in the first schedule. That is the 5% now. So we have changed the individual to where a person conducts a farming business wholly within the country. Please look at it carefully. Farming business wholly within the country. That person is subject to tax at the rate provided for as what? 5%. In the case of farming 3 crops, income of that person from the business for a period of 10 years of assessment, commencing from the year during which the first harvest of crops occur. Okay? But where a person conducts a farming business only within the country, which means that the farmer must be in Ghana. The farmer must be in Ghana. It must be wholly done in Ghana. Okay. 3 crops, we are saying that 10 years from the date the first harvest takes place. Let's look at what is 3 crops. 3 crops is what? 3 crops include coconuts, coffee, oil palm, rubber, and shea nuts. How many years does coconut take to grow? 3 years, right? So from your first harvest, so you plant it 3 years, first harvest is year 3. Then your concession starts from there. But remember that even within the concession, they are supposed to pay 5%. somebody should do an investigation for us. Where the people who bring the coconut, where do they buy it from? Okay. What about those those who are by the sea and they don't plant, they don't necessarily plant, but they harvest the coconut? And it doesn't care. It doesn't matter who whether it is planted naturally or it grows by itself. Okay. B. In the case of cash crops or farming livestock, other than cattle or fish, why have they taken cattle or fish out? Cash crops. What is cash crop? Cash crops include cassava, maize, pineapple, rice, and yam. Where is wheat? Now wheat in count.
Cereal or something.
Sorry?
No cereal crop.
So if you are doing cereal crops, you are not part. But wheat and rice are brothers or sisters. So I was expecting, the fact that they have said include means that it is not limited, isn't it? Look at the meaning of cash crops. Includes. So it means that anything that looks like it can be included, isn't it? Okay, so let's go back. In the case of cash crops or farming livestock, other than cattle or fish, cattle and fish, they are livestock, isn't it? Anna?
Yes, sir.
Cattle and fish, are they livestock?
Yeah.
I see. So they are saying that if you are doing like farming livestock other than cattle or fish, income of that individual or that person, please, I've mentioned that we have changed the name individual from the business for a period of 5 years of assessment, commencing from the year during which the business commences. Look at the difference. Why is this one? They look at the business commences. When does the business commence? When you start business. But with regard to the tree crops, they are saying that when the first harvest occurs. Why didn't we do the cash crop also from first harvest? And because of the short term in nature, so they didn't have a start date. When you commence, you have started. Okay. C, in the case of cattle, income from the business for the period of 10 years of assessment, commencing from the year during which the business commenced. Cattle. So all these people, let me ask a question then. So if I go to Nigeria and go and bring cattle, am I farming? Paul, I go to Niger, I go and bring goats and then come and sell them in Ghana. Am I into farm livestock farming, or am I a seller?
Yes, sir. You are into cattle.
I'm into cattle farming.
Livestock farming.
Hey,
well, when they buy it, they come and sell.
I go and buy them, come and keep them in my place more. I give them grasses, eat namonya belly small, and I sell. Am I into livestock farming?
Wow.
No, please. You are not into livestock. You are selling.
Evelyn said no. Eben, defend your position. Eben, why do you think I'm into livestock farming? Or who said?
Let me think. I did.
Eben, I did. Okay. Let's hear you.
Because you went to Niger, go and buy, bring it to Ghana to come and sell. Now, when you brought it to Ghana, you didn't sell it outright. You kept it for some time. Now, if you are to keep them for a longer period, in order for them to appreciate or to get a good money from it, definitely you are into that kind of business. That's a real business.
All right, Evelyn, why do you think I'm not into farming?
So because you didn't start rearing them from the beginning. You went to buy, you kept them for some time. So it's like you go and buy goods and keep them in stock and you sell. That's how I understand it.
This thing can cause trouble between the taxpayer and the JRO. the taxpayer can also say, I went and bought them small, or I bought them middle age, and I brought them and I started railing them. I have a farm. I give them grass. I feed them for 3 months. It's railing.
So I believe it's hello.
Yes.
I believe it's still cattle. It's still cattle. Rearing them. As far as you bring them and you feed them, for them to appreciate value, and you sell them, it's still cattle farming. Whether they are you bring them when they are one day old or a month old, and them when they are older, you are still rearing the cattle. But when you bring them and immediately you bring them, you sell them. Yeah, that's when maybe you're not in that specific business.
What is your definition of immediate? Paul, what is your definition of immediate? Is it 1 day or 2 days?
Immediate, maybe you don't have a fence, or you don't have a fence. You don't have I don't know where you keep them.
Paul, have you been to
and feeding them?
Hello, sir.
Benedict, tell Paul,
yes, you understand?
Tell Paul that you go to Alajo and they have a place on the train station or train line or something. They have a place and they are feeding them. Okay, Benedict, let's hear you.
Yeah, so
it's still raining. You're still raining the animal.
So I have a scenario that I want to add so that you help us reach conclusion. It's similar to what you are discussing. So the business incentivize oil palm plantation. I mean, people who are planting oil palm trees or palm oil trees. So they give them money, they give them tools, and then this company sometimes go and weed the farms, and then when the crops, that's what they call them, vegetable bunch arrive, they go and harvest. Now they buy the fruits from the farmers, and then they will now distribute to the manufacturing companies. Now they say they are farmers. I want your view on it.
You see, are they farmers? So what is the relationship between them and then the growers?
So the growers are individual smallholders, and they manage them technically. So if I have my land, they come and tell me that I can help you plant plantation, oil palm plantations, and indeed they will help. So they'll help manage me. They will sometimes bring extension officers, give me the necessary training and all that, and they will cultivate the farms. When it's harvested, I have to sell to this person, and then he will distribute it to, or he will now sell it to the manufacturing companies.
Evelyn, will you see this buyer as a farmer or the grower as a farmer?
Boss, I will see the grower as the farmer.
This guy is just a buyer. He's an aggregator. Is that what I mean? The person buying, you see them as an aggregator. Aggregators are people who go around and buy from the growers.
He didn't plant. He didn't farm. He didn't do the farm.
Good.
And the concession that is given is the beginning of the plantation. So somebody plants the palm oil, and in the middle you come and buy. Okay, unless you buy the whole farm
with the land. Is it with the land?
Oh, as for the land, it can be on lease.
Any other views? Because this thing can really create confusion between the JRA. I hear you, because sometimes, and depending on the arrangement between the growers, you see, it looks to me that there's a specific contract between the growers and then the buyers. So, for example, who gave the seed to the guy, who supplied the raw materials, the inputs. So, is the guy, and again, how is the pricing agreed? When the crop grows, is there a contractual obligation on the person to sell to me alone and nobody else? Legally, you think that if that happens, then the guy who is doing the growing is working for you. For example, if I have no other option than the crops belong, more or less the crops belong to you. Okay, and I cannot sell to anybody. If I sell to somebody, you can sue me for it. In that case, you can argue legally and say you're a farmer. Being a farmer does not mean that you go and hold a cutlass and start planting. Can get people work for you. So
Yes,
if
sir.
I was a judge in the seat determining these facts, I will take a lot of considerations. I will take a lot of things into consideration before I make my judgment. Benedict.
Yes, sir. Very well. Well understood.
What's your view? Now tell us your view before you go.
No. So my view, my view is that okay. So there's no an executor contract between the guy and the farmers. But in practice, like the farmers don't sell to anybody else apart from this guy, and usually the price is influenced or determined by the prices that the manufacturing companies also put out there based on the price in the world market. And so so based on that price, they also determine to the farmers. But even though they don't use cutters and hoe to go to the farm themselves, they invariably manage these smallholder farmers. You get it? But there's no contract. In fact, if the farmer one day decides to sell to any other person, this guy cannot hold him or can't sue him, and because there's no limitation like that anyway. But in practice, he's the guy that they sell to. In fact, the guy even goes there. They allow him to harvest the crops, and then he will now distribute it. So that's the fact. But I understand the other consideration that you have to make before a judgment. You can pronounce a judgment on it.
Okay. Any other question on agri? Then we move.
Sir, please, then in this scenario, who bears the tax? Who pays the tax?
You mean the who enjoys the incentive?
And who enjoys the incentive and who pays the tax?
So if the aggregator or the buyer claims that he is into farming, he can enjoy the concession, the 10-year or whatever concession that is available to him. But a GRO officer may challenge him, just like I've mentioned. A GRO may challenge him, and are you really a farmer? What tells me that you're a farmer? And so if I go through all my checklists and I realize that you are not really a farmer, but all you just do is go to people and aggregate them and bring the goods from the hinterland and then come and sell it in the market. I will see you as more like a trader than a farmer, and therefore I will not grant you the exemptions or the concessions. So the number of checklists must be good. I would have rather preferred that you enter into an agreement with them such that you cannot sell it to any other person. So, for example, I am pre-financing you. I'm pre-financing you. So I'm pre-financing you. I'm giving you the input. More or less, I take part massively in the farm. Other than that, people can hide behind the scene and say they are farmers, but they are just aggregators going to Niger, buy cattle, goats, come and sell and make their money and then be enjoying concessions. Evelyn, do you get my point?
Yes, sir. Yes, sir.
Okay. Let's look at number 2. The income of a person from an agro-processing business conducted wholly in the country is subject to tax at the rate provided for in the first schedule for a period of 5 years of assessment, commencing from the year in which commercial production commences. So this is also for agro-processing. And agro-processing, we mean the business of processing crops. Please, when you're reading the law, pay attention to includes, the inclusive term, and then means term. When they say means, it means that the parameters have been defined, and therefore means. If it is include, then it means that the parameters are open for inclusion from any other person. So agro-processing business means the business of processing crops, fish or livestock produced, caught, or raised in the country from their raw state into an edible canned or packed products. So if you are into any of these things, then that is where the agro-processing you will enjoy, and we are told that it is for a period of 5 years. 3, the income of a person from a cocoa byproduct business conducted wholly in the country is subject to tax at the rate that is 5% for a period of 5 years, commencing from the year in which commercial production starts. So I need you to take note, make your own notes for agric. Okay, and like I've mentioned, the policy rationale is to develop the agricultural sector and ensure food security. If you're into 3 crops, 10 years, starting from your first harvest. Cash crops, 5 years from the start of the operations. Cattle, 10 years. And then agro-processing, 5 years. Cocoa byproducts, 5 years. And remember that all of these things, the main reason why we are doing this thing is that we intend to encourage investment into the agri sector and give us enough food for export. Any question? That's for agri. I need you to summarize these things like this. Any question? Hey, those without us, are they okay? Can I move on?
Yes, please, you can move on. It's clear.
All right. Thank you. Let's look at rural banking, like I mentioned earlier.
Hello, sir.
Yeah.
Hello,
Paul.
sir.
Paul,
Yeah,
let's
so I did not see cocoa. Can you hear me?
Yeah, cocoa, yes.
Hello.
Yes, Paul, we can hear you.
Yeah, so the income of a cocoa farmer, is exempted from
that
tax.
One is not,
This
that
is
one is not
section
a
7.
concession. That one is not a concession, it's a permanent exemption. Look at section 7. Do you have the act with you? Look at section 7,
Okay.
paragraph G. Can somebody read it for us?
Yeah, I have the act with me. Section 7.
Paragraph G.
I have it here.
Read it.
Section 7G.
Mm-hmm.
Income from cocoa of a cocoa farmer.
Did you see the way we put it? The income from cocoa. And you know the cocoa farmers. I've been a cocoa farmer. I'm a cocoa farmer. So normally cocoa is not the only income we get. We get income from cocoa. We plant we plant cocoyam. We plant any other thing. Plantain, yam, cocoa by the yam and all those things. We do all of those things. Even cocoa hen. A cocoa crowd, we do those things in the cocoa farm. In cocoa kitten. But this one is the local one.
You are getting somewhere.
So the permanent exemption is only for income from cocoa of a cocoa farmer. If you have any income from any other thing, you have to either come under the temporary concession, and then we can grant you that exemption. Concession.
Okay, thank you.
All right. Now, rural banking, if you're a person who conducts the business of rural banking, you also have 10 years holidays from the date of commencement. Rural banking means the business designated as rural banking, and licensed by BOG under the Banking Act. Again, the policy objective was to ensure that the underserved, the rural villages, they also get access to banking. Okay. And my question to you is, if the purpose is for financial inclusion, should mobile money be granted exemption for enhancing financial inclusion? Do you think mobile money has closed or performed most of the job for which reason we gave this rural banking exemption?
This question is very tempting.
Sorry? The question is tempting. Forget about my affiliation with mobile money. Do you think we should mobile money should be granted exemption? Or the rural banking has to
I believe it has enjoyed its tax holiday or concession already.
Oh, you mean mobile
now
money?
being taxed? Yeah, but in the hands of the operator.
Yes, the operator. I'm talking about the operator. Because the policy rationale for we doing the rural banking is that they should go to the villages and make sure that there's financial inclusion, they are underserved. Now, mobile money provides that platform where you can save your money, you can do banking more or less, you can do banking in the villages. You can send money, you can receive money. That is banking naturally. So the question is, if we intended, and nowadays, hardly do you see rural banks. I don't know which villages have rural banks. Okay, nowadays. The question is, if mobile money is playing the role of the so-called rural banking, do you think mobile money, from a policy perspective, mobile money should be granted some exemption? Okay.
Yes, I think so.
Okay.
Yeah.
Because as far as the operations are in the rural areas, so if the person can demonstrate that he's in the rural areas and he's serving the unbanked, a lot of mobile money operators are also in the urban centers, Accra and stuff. But if the person is in the rural areas, but I also want to know, mobile money operators, do they report to the Bank of Ghana?
Yes.
Or are they under the Banking Act?
They are licensed by Bank of Ghana. So it is a.
So it's not the operators, but it's rather MTN rather, but not the operators. Is it the operators or MTN? MTN is rather under the Bank of Ghana.
Yes, if you say operators, then we are talking about the MTN, the Tigo. Those are the operators. They operate the mobile money. The agents, they are just making their money. It is the agents. So my question is, the likes of MTN mobile money, Tigo, Telecel Cash, should they be granted some exemption if they serve the unbanked?
No, because as you all know, we have majority of the business are coming from the urban areas, Accra, Kumasi, name it. They are in the urban centers.
Okay, so if they're able to prove that
some of them are in the rural areas, so we cannot specifically mention that.
Okay,
because specifically, if only they are exclusive, they can fit in this area, but they operating in my village. You understand? And you see, majority of even their income is coming from the rural areas. The urban centers. So they can't fit in this case. That's what I'm thinking. But however, the agents, yeah, the agents can be given that concession, but not the operators, MTN and Airtel. Thank you. The agents in the rural areas.
Okay. All right. No further comments. All right. Let's go to waste processing.
That's it.
Yeah. Let's hear you.
My question is, with the rural banking, now, if the rural bank is in the urban, for instance, Accra or Kumasi, would they also enjoy the concession?
Yes. Traditionally, rural banking, before we give you the license, you must be situated in a rural area. Today, rural has almost converted into urban. So Abokobi Rural Bank is in Abokobi. Is a rural area. But those days,
No.
when they gave Abokobi Rural Bank license in 1980, it was a rural area.
So they've enjoyed the concession, they are done with it.
Maybe they've exhausted their concession.
Okay, sir, please,
okay.
can I come in?
Yes.
The idea I know about rural area, rural banking is to serve a particular catchment area, specifically people who are on bank. For example, we have, as you said, Abokobi Area Rural Bank. They are not supposed to go above, let's say, 50. They have a kilometers, maybe 50-kilometer radius or somewhere. They have a particular catchment area they're supposed to operate their business. You understand? So that's why they are called a rural bank, a particular area
where
people are. So I'm saying that just a particular catchment area, and they have a particular transaction they cannot exceed. They can't give loans above certain threshold according to the Banking Act. If my memory serves me right, they can't give a loan more than 100,000 or so. They have a particular threshold for their businesses, and those businesses are micro, serving people who are not I don't know how to put it, who are not more capital intensive. Businesses are not capital intensive, but micro people who the banks, if they go, will be rejected. So that's the idea or rationale of establishing the rural banking to serve the unbanked people who will be rejected by the main banking industries.
Great. Let's move to waste processing. So paragraph 3 says the income of a company from a waste processing business is subject to tax at the rate provided in the first schedule for a period of 7 years. The period specified in 1 commences from the year in which the business is commenced. In this paragraph, waste processing business means a business where the principal activity is the processing of waste, including recycling of plastics and polythene materials for agricultural or commercial purpose. Can you see it? Now I want to ask a question before I go to the question. Here, I mentioned that the objective is to ensure environmental sustainability and recycling. So we give you 7 years, and you should try and convert and protect the environment. Why do we still have debts in the city? That's the first question. Let's go back here. I'm going back. Look at it again. The income of a company from a waste processing business is subject to tax at the rate provided for in the first schedule. My question to you is, take for example, Zoom Lion. They go around, go and collect the waste bin from people's house. They pay, they charge them before they get the waste to recycle. The fees they collect from the waste, is it part of this waste exemption? Is it supposed to be part of this concession? Did you guys hear me?
Yes, sir.
Good. What do you think?
Please come again.
So, Zoom Lion, they go around people's houses, collect their waste, the dustbin. They collect it and they pay. Before they take it to their compost plants to go and recycle. My question is the fees that they collect, and even in the ministries, they collect and the ministries pay. My question to you is that the fees that they are getting from the collection of the waste before they process it, Is it part of this concession? And now that one is supposed to be taxed.
Yeah, so the paragraph 3, sub 3, it clearly defines waste processing business. It says a business where the principal activity is the processing of waste, including recycling of plastics and polythene materials for agricultural or commercial purposes. It don't include collection. So the main principal activity is recycling. Is it tax laws are to be interpreted strictly, as you said? It's what the main processes is what recycling of plastics and polythene material. It doesn't include collection. So the collection aspect should be taxed at a normal rate, but the processing
interesting
is what
is that Paul?
Thank you. Yes, sir. It's 4.
Okay, that's a very smart way of telling me that I mentioned that we are supposed to interpret these things in a strict sense. Okay, who agrees with him? So, Paul, can't we report that income as other income? Accountants, can't you report that one as other income? Godfrey?
Yeah, you can record as other income.
Yeah, I think so.
Okay, so if I report it as other income, it should be taxed. No, everything under the waste processing is taxed, but they have a reduced rate of 5% currently. Right now, the confusion is: should we tax the collection fee? Should we tax that income at 25% because it doesn't form part of the concession, or we should report it as other income and tax everything as 5%?
I think it should be 25. I mean the normal rate, because that should be
that income is not part.
Yes.
Okay, and you align with
the principal activity.
You align with Paul that the definition of waste processing is very specific, needs.
Yes.
Okay. Maybe if I was marking, I'll give you, if you make such a strong argument. But if you don't point to me that waste processing means, I won't give you. Anyway, but let's look at residential premises. All right. So you realize that there is some thread running through all these concessions. They are geared towards solving a specific problem. Okay. The question is whether the problems have been solved. Waste. We are still sitting with waste. Okay. Residential premises is also supposed to solve a problem of housing deficits. Yes. So the income of a certified company from a low-cost housing business is subject to tax at the rate provided, which is 5%, for a period of 5 years of assessment. The periods commence from the year in which operations commence. So we are done with the company. 5 years, you get tax concession. Now, subsection 3 is very important. 3 and 4 is very important. They are different. So you realize that we are targeting two things, two major problems here. The first one are companies. The first one is companies who are ready to produce low-cost housing for individuals. So the companies will get their exemption for a period of 5 years. But 3 and 4 also deals with individuals who go and rent or who go and buy through a mortgage. Because the presumption is that when the houses are constructed, or even if they are not constructed, and an individual decides to solve his own housing problem through a mortgage, that person should also be granted that exemption. So it's a behavioral thing. So 3 says, despite sections 8 and 9 of this act, and I'll come there. For example, section 8 says that, let me go to section 8. Let's look at section 8 first. General principle, subject to the 6th schedule. You see, section 8 is making also reference to the sales schedule. But the general principle is that the Commissioner General shall not allow a deduction for the purpose of ascertaining the income of a person from employment. That is the general principle. If we are calculating your employment income, no deduction. The only less or the only deductions, should I call it the deduction? The only thing that we can subtract is personal reliefs. So marriage, child education, and all those things. Those ones we can deduct from it. But the general principle is that we will not allow any deduction of expense when we are calculating employment income. Even though you took taxi to go to work and you have all the records, you don't put in some of these provisions. Trust me, if you start calculating employment income, payroll, HR will be full at the end of the month. HR, when I was coming, I took taxi, and this is the receipt. This employment income that I'm earning, I incurred so much. I paid this agency to get this employment. So you need to take it out. Just like the businesses, when they also make sales, they take all the expenses. We're saying that, look, the Commissioner General don't allow any deduction as far as employment income is concerned. But this is subject to the sales schedule. And that is what I want us to look at. What is the sales schedule saying? Sales schedule paragraph 4, subparagraph 3 says, despite section 8 of the Act, in calculating the income of an individual from conducting an employment, business, or investment, an individual, normally we aggregate all your income together, then we subject it to the graduated rate. So you have your employment, you have some small business somewhere, you have some investment. We put all of those together. You are an individual. So despite section 8, which says that we cannot, in calculating the income of an individual for conducting an employment, business, or investment for a year of assessment, they get mortgage interest incurred during that year. So that is the only deduction that will be permitted. So if I have incurred some mortgage interest, then I can go and take it. However, 4 says an individual may deduct mortgage interest in respect of only one residential premises during the lifetime of that individual. At least we've helped you by helping yourself in solving the deficit, housing deficit. So if you decide to take a mortgage and the interest on it, if you are paying the interest to any company you took the mortgage from, then we'll grant you this particular deduction. Let's move a little bit further. I'll come back to the 3 and 4 and ask some questions. In this paragraph, unless the context otherwise requires, certified company, that is the first one that we say we are going to grant. Certified company means a company issued with a certificate from the ministry responsible for works and housing, stating that is engaged in a low-cost housing business. So if you want this particular exemption, go to the Works and Housing Ministry, tell them that you are into low-cost housing projects, and therefore you want to take advantage of this 5 years tax holiday, and then when you have the certificate, it will be given to you. Please, are we okay on that? Are we okay on that one? Again, I want us to look at 6. Can somebody read a 6 for me? That is the paragraph 4. I think I don't have it here. Who has the law? Read a subparagraph 6 for me. Agoga, you had the law, isn't it?
Okay, subparagraph says approve unit trust scheme and mutual funds. Am I right?
On the 4, you see 4. Residential, we have 5. Sorry, the 5 now. There's something under the 5. So under the paragraph 4.
Okay, low cost housing businesses.
What is low cost housing?
Okay,
it means what?
Let it read.
Okay. Was it Evelyn? Let's hear him.
Low-cost housing business
Mm-hmm.
means a business of construction for sale or letting of a low-cost, affordable residential premises.
Good.
And
Mm-hmm.
mortgage interest means interest incurred by an individual in respect of a borrowing employed in constructing or acquiring the individual's only place of residence.
Good. Rose, let's remain there on the mortgage interest. Mortgage interest means interest incurred by an individual in respect of borrowing. So it means that I don't really need to go and take a mortgage from somebody, from a company. I can go and take a personal loan, but the object should be that I want to use it to acquire or construct my only place of residence. The reason why I'm emphasizing this one is that people are abusing this particular provision. And this one even went to court. This guy at UI, he took the matter to court. He took some loan or he took a mortgage, and then he was paying the interest. So he took the mortgage and then the repayment schedule to the HR. And then he asked the HR that this is an incentive for him. So HR should reduce his income by the mortgage that he is paying. So at the end of the day, he pays a lower tax. Then the GRA said, no, you can't do this by yourself, because we need to be sure that the thing is, the mortgage you've taken is your only residential premises in your lifetime. Then the guy said, no, if you read the whole of sections, the whole of the sixth schedule, I don't need permission from GRA. I don't need a permission from GRA to enjoy any of the, if I am into a grape or cash crop, do I need permission from GRA? No. So GRA says, for me to be sure that you are not coming for another mortgage deduction on 2 or 3 houses, you should have sought permission from me. And the court read through and the court said, no, they don't need permission. And therefore, if you have a mortgage, you can enjoy it and deduct it from your employment income. Then GRA came up with a practice note. Practice note, I believe your tax administration lecturer has taught you what a practice note is, or you are going to learn. They are issued by the Commissioner General to explain some of the provisions. So Commissioner General is saying that before you take up any mortgage, for me to be sure, bring all your documents, bring me all your repayment schedule, and normally, in practice, GRA will normally approve a 2-year deduction. They will review your document. They will take your loan agreement, whether yours is for construction of a house. So maybe you have built your house and you want to complete the first floor. So you went and took some loan. The loan document, even though it's not a mortgage, the loan document should specify that this is a loan with the purpose of constructing your house. In other words, it should fit the meaning of mortgage interest. And mortgage interest, as Ruth read, means interest incurred by an individual in respect of a borrowing employed in constructing. Constructing means that home completion loan or acquiring the individual's only place of residence, or that you go to some of this HFC and all those things, you go and acquire it. Do you think that GRA should approve it, or you think that is not?
Hello,
Oh,
sir, please. My line went off. Hello,
hey,
sir.
like you, Paul, I'm going to share the ruling on. Is it a FIFA? Oh no, it's not a FIFA. I've forgotten the name. Oh, hold on. Let me see. Oh, this guy. Kwesi Nyantechi versus GRA. Kwesi Nyantechi
Okay.
versus GRA. I'll share the case for you.
Okay.
It's not the Nyantechi. Kwesi Nyantechi, yeah, it's here. Nyantechi versus JR. That was on the mortgage. So read it and then let's discuss more. But
Okay.
my question to you was, do you think GRA must approve the mortgage, or we should claim it directly?
From my understanding, there's no need for GRA to approve.
But how would they also be sure, say, you are not doing you are not doing 3 or 4 mortgages?
So they should come and verify.
At where? Paul, Obama tax administration idea. All right, guys. I think we'll end here. Okay, I'll do my best to do some recordings during the holidays and share with you guys.